And in our top business story, Dubai's non-oil private sector economy contracted last month as global uncertainty and low prices continue to weigh on activity. The Emirates NBD Dubai Economy Tracker reading of 48.9 was down from 50.7 in January and marked the first deterioration in overall operating conditions since data collection began in 2010. A reading of below 50.0 indicates that the private sector economy is generally declining. Above 50.0, that it is expanding. A reading of 50.0 signals no change. Travel and tourism companies noted the fastest deteriorations in business conditions, according to the survey, while the health of the construction, wholesale and retail sectors also deteriorated. Despite the lower reading for Dubai, the overall UAE PMI reading released last week showed an upstick in activity to 53.1 in February from 52.7 the previous month. But the index remained close to its all-time low and was down significantly against February 2015 score of 58.1. Higher demand for power and water last year from Dubai's growing population lifted earnings at the Emirates utility company in what analysts say is an indicator of healthy economic expansion. Dubai Electricity and Water Authority reported a 16% rise year-on-year in total comprehensive income attributable to the government of Dubai to 6.2 billion dirhams as the authority's sole shareholder. The Emirates population grew about 9% over the past year, which led to an increase in peak power demand in September to more than 7.69 gigawatts, to a 6.4% increase compared to the same period in 2014. Dewa's revenues increased 7% last year to 19 billion dirhams from 17.8 billion dirhams a year earlier, while net finance costs last year dropped to 901 million dirhams from 1.14 billion dirhams as it repaid 5.2 billion dirhams in loans. Dewa also said that it had amassed enough cash to meet a $500 million bond maturing in October and that it paid a dividend of 500 million dirhams to the federal government this year. As GCC officials confirmed that the $250 billion 1,200-kilometer GCC-wide rail project will be established, major companies and professionals representing rail industries from around the world have attended the 10th edition of the Middle East Rail Conference held at the Dubai International Convention Center. During a session on how to build an agile and dynamic rail system in the GCC region, rail industry professionals from various countries stated that while putting in place a GCC-wide rail network, all countries in the region need to work on setting up a unified standard following an approach adopted by the European Union of states. Focusing on the approach in the region, experts in the rail industry revealed that many GCC countries, such as the UAE and Saudi Arabia, have already set up the right infrastructure model to achieve their goals of having a regional rail network, but stressed that interoperability and public-private partnership model of financing projects is essential to any success going forward. While talking about the future of mobility in Saudi Arabia, Arabian Railway Company officials stated that they have partnered with the various international companies to offer multidisciplinary railway services, while also providing a range of activities across various railway transportation disciplines, including railway operations, maintenance and logistics support.
GCC connection is an idea that it's been there for a long time. The interests of the whole countries in the region to push this idea forward. There is a lot of work being done so far, a lot of coordination between countries already in place. I think we are still in engineering, consultant, study phase so far. Hopefully we are looking for to have this the outcome of this study soon, turn it into projects where contractors start to do the work. I do believe this is the interest of the countries. I don't have enough, I would say, update about it right now, but what I believe that it is going to continue this dialogue, and people hopefully in GCC will see this project start very soon.
What you have to do is to avoid the mistake that we made in the past years. But now we have a mature technology. I think it's working, and as you know, in Europe we have a system called of the corridors network. It looks like more or less what you are doing with the GCC network, so you are in the right direction. But of course, we all have a difficult economic situation to face, but little by little, as infrastructure construction will be a priority for you, you will go on the right direction to build this GCC network and to have a very important network in this country of the UAE.
How do you get technology so that people can move from one GCC country to another, checking passports, visas without having to stop the trains? There has to be an element of cooperation in terms of how that happens, as happens between the UK and France with the Eurostar. There has to be something, and there has to be some learning that the GCC countries can adapt from the arrangements between France and Europe in terms of checking the checks that they have for cross-border controls. Another challenge would be trying to get together a unitary system for approvals of infrastructure and for rolling stock introduction. If you don't have a unified standard for approval of infrastructure and approval of rolling stock, then it would be quite difficult to actually have a unified railway.
The two-day conference, organised in collaboration with the UAE Ministry of Infrastructure Development, the Federal Transport Authority, Land and Maritime, has brought together rail developers, transport operators and government entities to discuss challenges faced in the rolling out and operating successful rail networks. More than 300 exhibitors from many countries, including the UK and Italy, have participated in the conference, offering their insight into developing a safe and effective network of railways while also developing innovative logistical services across the GCC region.
It's been a fantastic turnout. I mean, you look at the UK alone has brought over 50 technology companies to come and exhibit at the events. What we've found is there's a lot of enthusiasm for the railway market. I mean, you know, a lot's been said in the press recently about some of these projects being put on hold, but fundamentally, the railway networks form the backbone of the freight and transport and passenger systems of any world-class city and country. These are projects in the long term that will be going forward, and like I said, forming really the backbone of not just the freight networks but passenger travel as well.
A new report by Frost & Sullivan, launched on the sidelines of the ongoing CABSAT, has revealed that over-the-top online video streaming services will play a major role in the entertainment business of the MENA region, as it is expected to have over 390 million internet users by the end of the decade. The future of television content and viewing patterns of audiences has been the top focus during the three-day trade event for satellite, broadcast and television industry, which opened on Tuesday. With the global value of OTT content expected to reach $27.7 billion by 2018, this year's CABSAT has a new feature in the shape of Content Marketplace, a dedicated platform for over 30 exhibitors, which include TV and film content creators, production houses and studios and distributors of content. With the entry of Netflix into the Middle East market in January this year, the impact of online service on the regional entertainment industry has been in discussion during the event's Content Congress. According to the representative from Netflix, as a result of the popularity of the service around the world with over 69 million subscribers worldwide, TV service providers should adapt to the new competition by improving their quality of service. Despite the global popularity, it was added that the competition for all service providers is to understand their audience's demand and offer the right service at the right price.
The technology will continue advancing, and it'll become more readily available to whoever wants to create. The key is going to be the quality of the creation and what is the audience, and can you match the quality of the creation with the audience that wants it? That's the space that is next real benchmark for where content and satellite and cable broadcast, all of that needs to go into, is how do we pair up this amazing content that's being created all around the world with that audience that doesn't even know it exists. We see ourselves as being able to be one of those channels. We prefer being the best of those channels, and we strive to be the best at those channels. But there is a space for everybody at this table. It's not winner takes all. There's room for everybody to have their piece.
Meanwhile, regional competitors such as Stars Play Arabia believe that it is about maintaining and developing the right partnerships. According to the president of Stars Play Arabia, their paid subscriber base is increasing by around 500 new users per day, adding that they're expecting to have over 200,000 users by the end of the year. It was also added that the growth has also resulted in their partnership agreement with the Etisalat to offer their own service through the telecom operator's eLife service.
The idea behind partnering with eLife and making the service available on eLife is that for every 19-year-old that wants to watch Gravity or Amazing Spider-Man on Stars Play on their mobile phone, on their S7 or S6 phone, you have another family that still wants to watch the service on large screen TV and through their eLife platform, because they might be watching a free-to-air channel and then they decide, I'll watch on demand on eLife's platform. So we feel we have the first mover advantage by securing the key content partnerships in this region. And we also have a first mover advantage on partnerships with telecom operators. For example, we were discussing eLife, Etisalat eLife service earlier. Netflix isn't available on eLife. Stars Play is. Similarly, in Qatar, we are available on Ooredoo's Mosaic service. Netflix isn't, right? So we've launched from Oman to Tunisia, everywhere in between, and with solid partnerships. So that's our advantage, really.